Yeah, I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat. Yo, grew my hair and took the grill out. Think it's time to put it back in. Trying to get into that big house, turn the crib into the mansion. Needed something with that big bounce. You know I had to hit Jackson. Aaron Rodgers with the quick routes. I'm with the gang, we packing. We on the field at Lambo. Might peel in a Lambo. Running drills in my camo. They know what the M stand for. Still got fam in Hawaii, yeah. Couple fans in the lobby, yeah. Couple grand in my pocket, yeah. Couple grams of wasabi, yeah. Eye it up, no glasses. Light it up, no matches. Wife it up, no ratchets. Might turn my wife to an actress. And we gon' make a movie, no Kim K. Give a fuck about what your friends say. I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat.
I'm just sticking to the code, I keep it so G. She asked me what I smoke, I'm smoking OG. I don't fool with too many, only catch me 4 deep. Gotta stay away from snakes, swear these people so creep. I've been grinding for a minute, many labels so sleep. These rappers drop a song, be hot for about a week. I put Gucci on my toes, I keep some cold feet. I ain't paying for no hoes, you niggas know me. I'm about to body the beat. I keep me a hottie with me. She wanna for a fee. Give me that for free. Keep me some money on me. Smoking the gas key. You with me, sheesh. But need OG Keith.
I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat.
Yeah, head up in the clouds, dog, they saying I look stressed. I've been feeling down, pray to God that I'm up next. Remember when she blew me off, that's why I can't text. Now she call me petty, but I swear I can't forget. This ain't a test, now they saying that I ball like Jerry West. Coming back for what is mine, can't take no less. I said go and take a shot, so I need your best. And stop the threats, so nobody's into me. I don't got time, I'm not giving the energy. Too many people around me, I'm finicky. I do not mess with you, dog, you're not kidding me. You don't got way too close. I been up at the top now, so they all wait for the landslide. I seen too many people that switched up, whose man's high. Through it all, I stay the same, I swear to God, I can't lie. Been down so damn low that I came up from my life. They talk way too much on the internet, it's not real life. I swear my fam waiting, I can't lose, and I'm still right. Still right, I swear that I'm working them up till like midnight. It's real life, I got a time and I'm coming to get mine. In time, I cannot lose and I'm coming right inside. I'm in mine, yeah.
Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Ayy, on the road, here we go. Yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like. Yeah, you about to see me on demand like. You know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll. And it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor. Hey, on the road, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah, you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the road, here we go, here we go. Here we go, at the top of the class on a roll. And it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah, you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go. On a roll, here we go, here we go.
What is going on, everybody? Welcome back to the Frankie Candles live stream every single weekday right here at 5:45 p.m. Eastern Standard Time, and on FOMC days. We're here, I guess, at 1:42 p.m., guys. We got FOMC going down. The chaos is about to begin. Are we going to get the volatility, guys? To be honest, sometimes FOMCs give us the crazy volatility, and then sometimes during the meeting it gets kind of lackluster. But I wanted to drop in here and go live for FOMC, cover some of this volatility, and talk about what I'm expecting next year for Bitcoin. If you guys tuned in last night, you will know that we were looking at some money flow potentially indicating a bit more of a correction to the downside. Is that still in the cards? I'm going to talk about if that pullback is still in the cards. I'm going to talk about the key levels of resistance, the key levels of support, and what I'm looking for next here on Bitcoin. Probably no rate cuts today, guys. We're going to break that down for you. But with all that being said, shout out to the CandleMafia. Thank you, guys, for tuning in. I appreciate every single one of you guys. Shout out to Dan from Joey's on Mulberry Street. Says, it's 143. It's 143. Shout out to Dan from Mulberry Street. What is going on, bro? Welcome in. Good to see you, bro. But listen, we got the king of Bitcoin in the chat. Hopefully, he can help us pump this thing back to the upside. We got Satoshi Glakamoto in the chat who said, I have to go by Franklin on FOMC days, guys. Maybe I'll start dressing up in a suit, and I will go by Franklin Candelabra during FOMC. We'll put on our fancy attire. But yeah, we got Servando Estrada in the chat. Hugo's, what is going on, bro? Said, all the downward for the start of the week makes me think he's going to say something dovish, and then we pump. Hopefully, we could get that to play out. Now, as you guys know, yesterday we were looking at that money flow coming out. I am still holding my long positions. They couldn't stop me out, guys. But I am still holding those long positions. But, if we do get a pop to the upside, guys, it could happen by surprise. We were looking at the money flow in the daily, potentially looking to fake out, but we cannot just ignore the fact that it is over time trending to the downside. We'll take a look at the medium time frame money flow. Is it more likely for this range to break up or down? We're going to break it all down for you today, so smash that like button if you have not already, guys. If we get 550 likes on tonight's live stream, we'll give away some Frankie Candles hats on Friday's live stream, and if we get 1,000, we'll give away $200 in Solana. So with all that being said, shout out to Julius. What is going on? We got Robin Hood. He said, here's my vote for Franklin in a suit. That'd be so funny. I'll wear glasses too, and I'll put some tape on the middle of them. But yeah, shout out to you, man. Thank you for being here. We got Robin Hood in the chat. Come on, baby. Come on. Steal from the rich and give to the poor. We got Jesse in the chat, our like police. Thank you for being here, bro. We got Alexandra G. We got everybody in the chat. The Godfather said, hold me, Frankie. I'm scared. I'm here for you, the Godfather. Show the Godfather some respect in the chat, guys. But without further ado, let's go ahead and jump on into the charts. Hopefully we get some volatility live on stream here. Let's get into it. All right, so here we are, guys. Now, obviously, for the most part, right, Bitcoin has just kind of been ranging here ever since we popped up here on, call it July 11th. We kind of bing-bonged up and down. We were catching some of these local trades within the volume profile over this consolidation in the premium Discord. Some really, really nice trades to be had in here. Obviously, as we rotate from the low to the high, from the high to the low, back and forth. We did take that long over the weekend while I was in Vegas from the low to the high. Literally got paid to go to a bachelor party, guys. That was pretty nice. And only trading can do that for you guys. The freedom that trading gives you is insane. But we did get that drop, and we did finally fill that volume profile in full as we looked at yesterday on the stream. And I did take that little scalp long position, and as we talked about yesterday, where do I got that long position here? So I am still holding this long position as we were waiting to come down in here, put some bullish divergences in, which we did get here on the 1 hour time frame. We got the low, the higher low, the low, and the lower low on our price action, and we did finally get that move up to the POC, which was TP1. I'll be honest with you guys, I did not take profit here just because this is a smaller position for me. I'm just going to go ahead and roll with this. If I get stopped out for a small loss, no big deal. But we did get that move up to the POC, just showing you guys the very, very high probability here. We deviate above those highs. We get those bearish divergences. We get the rotation all the way back down to the value area low. We long that sucker in expectation to see that POC tapped. We got it, got a little pullback, got back above it. We kind of see the FOMC day volatility popping up here. But I want to talk about the probability of this range filling in full. And yeah, I mean, to be quite honest with you guys, we were looking at some money flow yesterday, looking for a continuation to the downside. And if we take a look here at the 4 hour time frame, you guys can see we do have money flow starting to cruise to the downside here, guys. And when we look at these volume profiles, a lot of people ask me, like, Frankie, I get it. I've been watching you long enough to understand how goated these volume profiles are for looking for longs and looking for shorts at the low of the range, at the top of the range. But how do you know if this thing is going to break up or down? Now, this obviously comes down to the longer-term context, which we oftentimes use money flow for, and you can see that 4 hour money flow is starting to crack here to the downside, looking to cross over into the red. And when we look at this, I actually showed this on the live stream last night on why, the money flow was looking kind of bearish here for a push to the downside. Will we get it? Market Cypher B says yes. If we get some kind of like dovish speak from Powell, maybe we can get a shocker rip to the upside. Obviously, the expectation here, at least based off the volume profile, is to go from the low to the POC. We might bing bong around, but if we can get a rip up to that value area high, I'll talk about some resistance levels that we have up here that I'll be interested in potentially shorting. But I would say money flow for the most part here. I mean, there's no doubting this, right? This is definitely coming to the downside. And when we have these ranges, guys, you can see, right? We kind of bing bong around. We have that big old green money flow wave, and then typically, right, this, in my opinion, would indicate that it is a little bit higher probability that we will get that bigger break to the downside for potentially a bigger drop down for the bigger retracement that we've been looking at. Potentially down. We're going to cover those lower levels as well. I want the Mafia to be ready for those. We've covered them in the past, but I will bring them up. We do have a CME gap down here at about $114,000. Are we going to go fill that gap? Potentially. Money flow would definitely be calling for that. But, when you have these ranges, money flow crossing into the red would probably make it a little bit more likely for this to break to the downside, because if we wanted a massive rip to the upside, not that this cannot happen by surprise, but based off money flow here, the chances of this breaking down are definitely going to be higher probability. And this is kind of where I brought up this older range, where we were bing-bonging around here, again, in a nice little volume profile. And this is obviously on a little bit of a higher time frame, as this was a much longer-term range. So I'm going to actually pull up the daily time frame, but you can see the same kind of technique is being used here. How are we how are we making the call for this bigger drop down to 80 to 75,000? Well, it's the fact that you're bing-bonging around here in a very similar fashion on the 4 hour right now. You have that big old green wave, and then as that money flow starts to come out, you go from the high, right? You fill that range in full to the high. You get back down below that POC, but if you can't get above that POC and money flow is letting you know that the trend is going to continue down, right? Maybe you don't get that fulfill the profile and you get that bigger drop down, to those lower levels, which we did have down here at 75K for that beautiful, beautiful pop back to the upside that we saw play out perfectly. And I just can't unsee this, guys. It's very similar. Price action is fractal. Although this is on the daily time frame and what we're looking at up here is on the 4 hour time frame, I would pretty much look at that as a very, very, very similar kind of setup, right? It's like, well, hey, we have that big green wave. It leaks out to the downside. And if we can't get above this POC right now, I would say 118,269 is the level to break and hold in order to fill this in full, obviously, because if we cannot get back above there, you can see how similar that kind of setup is with that money flow crossing into the red. You're anticipating, lower highs and lower lows as we have during the beginning of the week, right? Coming down, putting in the lower high, the lower low could be another lower high for another lower low to come, and money flow would be confluent with that, indicating a potential breakdown here, guys. I hate to be the bearer of bad news here, but, I'm just the messenger. Don't shoot the messenger, guys. I'm just bringing the information information on the charts. Hopefully, we see this fake out. I want this thing to go up as much as anybody else. I am holding a bunch of long positions. But again, I would say, we were classifying this as more of a low time frame trade because of the things that we just brought up with the money flow. But you can just see how similar that is to that kind of daily example that I just showed you guys. So, I'm just showing you how things have played out in the past and what I look for. That is what that would call for. So that's kind of my bias right now. But as you guys know, as a trader, I am ready for those fake outs, and I'm going to capitalize on either price moving up or down. So if we get the move down, I'll stop out of that short for long for a very small loss, right? Unfortunately, I am not holding a short position. We did have the perfect short setup here, but I was actually traveling during this time, so I was not on the charts. But typical volume profile trade, if I were short, I would be short from the value area high at this point. Another thing to bring up here, guys, is, when we were looking at this on Monday, we did have this golden pocket 786, which was a high probability area to put in a lower high. You have your high, your low, your lower high, your lower low. Not only are you anticipating to come down to the value area low, but you also had money flow coming out, indicating the trend would continue. But we actually did reject another Fibonacci retracement here, which is a high probability area to put in that lower high right into the golden pocket 786. And this could also be calling for another break of structure to the downside, which would also align with everything else that I just brought up. And that would call for a move down, guys. So hopefully we can get some kind of crazy, shocker news out of Powell, and maybe he's a little bit dovish, and we can get that pop to the upside. But obviously the predictions here are like 96-point-something% of no rate change, right? No rate cut coming in. So this might already kind of be priced into the market. But here's my kind of plan here, guys. If we do come down, the next major level of support, I will just bring this up. We do have a golden pocket sitting just below this value area low. But as we looked at on the live stream yesterday, am I super interested in this? More often than not, when I look at the volume profiles, if we did come down here, I would just see this as a deviation below the low for a long position, potentially if we get the confirmations to get back into the range, push up towards the POC, and then flip that POC to come up to the high, just like we did on this long position right here. But with the money flow, guys, I would say, like, coming down here, I'm a little less interested in this golden pocket. We actually do have a little confluence here on a daily MPOC as well. However, we could get the bounce there, but with money flow, if we drop out of this range, we have to be aware of that same situation that we had that I just brought up here on the daily, right? If we break down out of that range and money flow is coming out, it might be a higher probability, right, that we are just going to break down out of that range and go for some lower prices, right? You break down out of that range. I mean, this time, at this point, right, we kind of just broke down and started liquidating all the longs. So we got that fast drop down, but then you get the rip up, you reject the value area low and continue down. I am kind of still looking at that as a similar situation here, just a little bit more locally. If we do get the bounce, is it impossible to get back into the range and send it to the high? No, but with money flow, I would be very, 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 very cautious of a lackluster bounce for a lower high, an inability to get accepted into the range for that bigger drop to the downside. Honorable mention, we do have the 786 sitting here at about 115,828. However, not a lot of confluence down there, guys. I have to call it like it is, right? Not a lot of confluence down here. So for the bigger drop down, I would say, like, this is the last level that, we could get the bounce off of, but I'm personally not as interested in this because of the money flow. Does that make sense? I think it's very clear, right? If we wanted a higher low and a massive move up on a lot of time frames. So if we do get that bigger retracement, you guys all know we are looking at that bigger key level of support. We obviously bounced off the daily MPOC golden pocket here, which is a much larger golden pocket. Got the nice bounce. If we do come down and we lose that local golden pocket, this is already tapped, right? We've already gotten a nice bounce from here, so I'm not really that interested in this golden pocket. So if we do lose this, I will be looking down towards the 786, which does sit at about 113.50, but we do also have some confluence down there. We have the CME gap. We also have some single prints, right? So if we lose this golden pocket and we break into these single prints, we might be able to get a fast drop through those single prints, which are very similar to low volume gaps, meaning that price will move very quickly through them. And this could bring us down to that $114,000 CME gap where we have that 786 kind of backing us up. So I would say, like, for the bigger levels of support, this is definitely the zone that I'm going to be looking for. If we get that bigger retracement to the downside, if the 4-hour money flow is going to cross into the red, we could eventually make our way down to that $114,000 level. Now, this does not make me bearish in the long term, right? We've talked many a times about seeing the major breakout on Bitcoin. This is very, very bullish in my opinion. I do still remain bullish on Bitcoin overall, but we could still, potentially even come down to 112 and 110K. I don't want to go over that level too much because we've covered it so many times, but just to kind of explain why this wouldn't be the scariest thing in the world, because, you have this quick move up, we might want to fill that inefficiency, come back down and retest this structure before putting in a higher high, higher low, and a higher high. And again, this is very similar to the structure that we had here on the higher time frames for Bitcoin when we drop down to $75,000, right? It's like you come down here to retest that structure. We barely front ran it. But again, why was I not panicking here for the bear market? Simply put, we did not break macro market structure. We had the key levels of support, and it's a very similar situation here, just in a little bit of a shorter term context. So yeah, that's my overall thoughts on Bitcoin, guys. Again, I would say Market Cipher B is calling for the push down. Hopefully, Powell can, say something, Powell. Say something to push this up. But, that's what the charts are calling for, and that's how I'm going to be treating my trading plan. If we do come down, I'm going to be paying attention to 114K. Maybe I take a little scalp at that golden pocket, but again, I would not be, super excited about that long. And then if we do get a shocker move to the upside, just to bring this up, so I have you guys prepared in both directions. If we do get that push to the upside, obviously we do have the golden pocket up here, which is already tapped, but we do have some confluence up here. We have the value area high sitting at 119,536, right? So if we did get the push up to fill this volume profile, wouldn't be the most shocking thing in the world. It would be going against money flow, but it is just a fill of a volume profile. So this is local resistance here at the value area high, $119,533. And then just above that, we do have some other resistance up here. We have a daily level sitting at about $120,098. And then if we pull up some MPOCs, you guys can see this is a little bit of a pocket, right? So you do have the daily MPOC, the daily golden pocket's like an honorable mention. It's already been tapped, but you have the daily MPOC, and then we also have that liquidity that we have been looking at on the heat maps, as you guys know. Still holding this long position as well. This one's up about almost $1,400. Might want to lock in some profits here before the volatility starts, but that is one of the longs that I'm holding. And then the other one is the scalp, kind of sitting. It's sitting in slight profit here. But if I pull up the liquidation heat maps real quick, let me just load these up for you guys. We do have the liquidity starting at above, pretty much above this wick at about 120K, leading all the way up to about 120,500, which is perfectly confluent with this resistance. So if we do get the push up, honorable mention. I will be paying attention to this value area high as key resistance. If we get on above that, right, we do have this next little level. And I'll be honest, guys, like if we get up here, I will be looking for shorts, but it's probably going to be a little bit of a sketchy situation, right? Because it's like, if we get out of this range, it's like, is Bitcoin just going to go for that crazy shocker rip to the upside? Are we going to see that daily money flow fake out and come back into the green? I will take some shots at shorts up there, but I will have tight stop losses. I would assume if I had to kind of just like rub the crystal ball and try to figure out what's going to happen there, I would assume that, these are going to be kind of difficult, because anytime you start like approaching near highs like this, especially when you're this close to the all-time high, it is a little bit dangerous, right? Because you might just be breaking out of the range for a retest and then ascend back to the upside. But these are definitely going to be the next key levels of support. Resistance, right? So if we get up here, I'm definitely watching this zone of resistance. If we come down, right, golden pocket, honorable mention, but for the most part, we could be headed down towards that $114,000 level. And again, money flow would be pointing for the higher probability to be for the move to the downside. So we'll see what happens here for FOMC. Let's see. What do you think of the RSI on the weekly and monthly chart? BTC, it does not look like the BTC. Oh, on BTC, does it not look like the beginning of a correction? Yes. Shout out to Bobby. Yeah, 100%. This is why we are watching that 110 to 112K level, right? Money flow. We also have the weekly bearish divergence looking to print, as we covered yesterday on the live stream. We have the higher highs on our price action. Let me hide this TA so it's not super, super ugly, right? We have the higher highs on our price action, the clear lower highs on our momentum waves. I assume if you're looking at the RSI, you're probably seeing the same thing. This is a weekly bearish divergence, oftentimes calling for a correction to the downside. And if we do get that, right, this is why we've been talking about this correction so much, because if we do get this red dot, and you can see the VWAP is cooking to the downside here, so that red dot could be printing very, very soon. And if we do get that, it would also be another thing. You guys are probably starting to find a little bit of a trend here, right? There's a lot of bearish puzzle pieces here when it comes to the chart. And I would say if we get the rip to the upside, it has to be some kind of like a shock, right? It has to be like a surprise rip to the upside, because all of the indicators, all of the TA is, in my opinion, pointing towards a little bit more of a correction down. But as a trader, we got to be ready for those surprise rips to the upside so we can profit, whether price goes up or down. So we do have the weekly bear div, and to add to that, the VWAP is also, it's not like we have a weekly bear div printing with like the VWAP shooting up, right? It is crossing down, which means that red dot is going to come, right? And then that would be the printing of that bearish divergence. And this doesn't necessarily, I know weekly bear divs have called the bear market before. Is it impossible that that's the start of the bear market? Maybe. That's not the camp that I fall in, because not all bear divs are created equal, right? We did have a bearish divergence back here, right? You have the lower highs on your momentum waves, higher highs on price action. We did get the pullback, but again, it was a bit of a retracement before a higher low and a higher high. I'm hoping, right, that is going to be the case of what we see here. But again, that's why we cover these key levels of support. Coming down to retest this structure, at 112 to 110K would not be out of the cards, but it would still be a potentially great place to bounce, to put in a higher low, and then really start the parabola here into the real new all-time highs. And then hopefully, maybe we get, we do still have time till September, guys. No one is, obviously the projections here are that there's no rate cut during this meeting. So September would be the next place to look. So we do have some time to potentially get those corrections to the downside, even have the altcoins correct a little bit before finally having September come, and then maybe we get the rate cuts, and then that's where you start your bigger move up. We'll see what happens. Hopefully, everybody pray to the crypto gods for that surprise pump to the upside. Let's see. Shout out to Jesse, says, what a Frankie Candles tattoo will always fit. Shout out to Jesse. I don't know exactly what that means. Should we get Frank? Actually, we have a couple of CandleMafia members that have Frankie Candles tattoos, which is the coolest thing in the world. I never thought in my life that I would ever have anybody tattooing my brand on their skin permanently. It's the coolest thing in the world. Shout out to Rob the Crypto Snob. We have a couple of people who have done it. But yeah, shout out to Jesse. Let's see. Yeah, rates unchanged. Shout out to Mike. Yeah, it's this is obviously the the minutes came out. Yeah, so no change. This was the obviously the expectation here. Let me load up the Fed Watch tool here real quick. Come on, baby. Load it up. I'll take a sip of that Aztecian Cactus black coffee in the Bing Bong mug here. But yeah, obviously this was the expectation here, right? So it's like 96% at the rate would be unchanged. So no shocker there. Maybe we see a lackluster, maybe we see a little bit of a lackluster FOMC. But we'll see what he says during the actual questioning. And yeah, I have a Frankie Candles tattoo. Shout out to Wolf of Crypto. Is that true? Shout out to Wolf of Crypto. Let us know. If you actually have a Frankie Candles tattoo, send it to us in Discord. We always shout people out. Shout out to Carrie Stressel, said, howdy from Hotline Pepper Products. Let's go. Shout out to Carrie Stressel. Makes fire hot sauce. I think it was the mango habanero that I loved a ton. Shout out to Carrie. She sent us, they sent us some hot sauce. It was very, very good, I will say. I'm not just saying that. It was actually really good. And I'm not even really a hot sauce guy. Let's see. I got Frankie Candles for life tattooed across my forehead. Let's go. Dynamic entry. Let's go. There's the push to the downside here, guys. Oh, boy. All right. I mean, hey, this would not be a shock here. This would not be a shock. Let me pull up the TA real quick here. Bada boom. And I will pull up the live stream when it goes live, guys. We'll cover a little bit of that. It does get pretty boring after a while. I'll play a little bit of it, and we'll have the candles here just printing in the background. Should we put the 1 second chart on here so it gets super exciting? Oh, my God, it's going to zero. Oh, my God, guys. Yo, the 1 second chart is crazy. Let's see what happens here. All right, let's see. Shout out to Chris Amella. Oh, my God. Tony D, check out that chat. Tony D's going to crack up at that. I cannot read that out loud. But let's see. I put a bet on no change, which means it will be a cut for sure. Yo, shout out to Sounds. Pause, yeah. No rate cuts till tariffs end, yeah. Yeah, let's see. So I just want to miss anything in the chat. Yes, fake pump likely. Yes, I would agree with that. And I'm not going to lie, guys. Let me pull up a reasonable time frame here. Yeah, I'm not going to lie, guys. This is, rejecting from the lower high situation here on the fib, lower high here on the fib. Money flow coming out again. We'll see. Maybe we'll see it play out live, and you guys can see, like, wow, TA is not astrology for crypto bros. It actually plays out. But again, for me personally, and I want you guys to understand this, right? Like, as we are looking for the higher probability move to the downside, this is not a situation where I am just like instantly shorting because my bias is to the downside, right? I have to get some kind of a setup, right? So again, my levels would be higher up here towards 119.5 to 120,500. But if it comes down, I will just sit on my hands and wait for an actual valid setup. Whether that comes in, whether we get a break of 117K, which this is still the biggest key level of support, guys. If we lose 117K again, goes along with everything I just mentioned for the bigger drop down. Maybe we can catch a retest here. I kind of wish I caught this retest at the Fibonacci retracement. But again, I am not a huge fan of just trading in the middle of the range like this. When I am looking for a trade in the middle of the range at the POC, it is oftentimes in the context of rejecting a Fibonacci retracement. But, I just simply was not interested in that. I'm totally fine missing trades to wait for a actual sound setup with confirmation. This is very important to understand if you want to be a trader, guys. You have to wait for your levels to get hit. You have to wait for those confirmations. It doesn't mean that if you don't get the confirmations, you're not going to get the move. But over time, only pulling the trigger on the confirmations is going to keep you making money over time. So it's very important to realize, because I know a lot of people like to chase trades. I know they like to just jump in and try to hold on for the move. But in my opinion, right, I did not catch the short up here. So in my opinion, right, I would just rather wait for the value area high or beyond, right? If it comes down, I will just sit on my hands and we will just wait for those lower levels and those next long setups. Or, a retracement for a nice setup on key resistance, right? Not a POC. I am much more likely to take a short position on a retest of a value area low with money flow coming out, because that indicates the range will break down, like I showed you on the daily time frame on the previous price action, rather than shorting the POC like this. Just a better setup with the way I trade. All right, let's see. Shout out to Cal, says, hello, can you tell me about your trading group? Is it a signals or training? What sort of time is it? I'm in Cambodia. It is, I don't even know how to read that time. I am more of a night owl, though. Shout out to Cal. It is not a signals group, and there's a very specific reason for that. I will never run a signals group. If it was as easy as just having someone tell you when to buy or sell, no one would ever learn TA. Everyone would just be in the same signals group, having bots set up, making $1 billion. Basically, what I do is I'll kind of show you a little recap of one of our last. Let me pull this up real quick in the Discord. Just saying the best way to do it is just to kind of show you. Actually, I'll just show you here, right? So I have the pre-made, right? I have the I spoon feed my trade setups, right? So, whoops. What the heck just happened there? I spoon feed my trade setup. So basically what I tell the Mafia is like, hey guys, this was on Monday. I said, hey, we rejected the value area high. I am going to anticipate a continuation to the downside into the value area low, where I will be looking for X confirmations. It's always different between each trade, where I will be looking for specific confirmations. And then if we come in there and see those confirmations, that's where I'm looking to take the long position. And then, once we come down there, I actually have this on the chart here. This was yesterday, right? We were saying, hey, we did get that full continuation down to the value area low. We did get the 1 hour bullish divergences, and hilariously enough, right, you're never going to get the timing perfect, but, if you just move this over, it's like, whoops, get both of these, right? It is exactly what we were looking for, right? You come down, lose the PLC, come to the value area low, bullish divergences, and then, there's other confirmations that we look for as well. We also had an SFP down here, which is a nice lower time frame entry trigger, and then you get the bounce into the POC. And in a volume profile, right, the POC is always going to be your first target. And we go down, get the confirmations, and we get that bing bong up to the POC, absolutely perfect. And then more often than not, you will get the flip of the POC into the value area high and potentially beyond. But in this case, with the way the charts look, I would not be expecting, not that I wouldn't be expecting this to fill, but I wouldn't be shocked, right? Based off of everything I just covered, if this just winds up coming to the downside. But we hit TP1, which is nice. Again, I personally didn't take profit, but that is always going to be your first TP within a volume profile trade. So that's what I do, right? We have everybody set up, waiting for the actual trade setup with specific confirmations. So not only, this is not a signal, right? But I'm teaching you exactly what I look for. So not only are you getting the spoon-fed trade setups, but you're also learning over time. Maybe you're trading, BNB or something, right? And you could use these same strategies on any asset that you're trading. So you're also, while getting these spoon-fed trade setups, you're also learning how to be a profitable trader over time, and learning the strategy over time, which makes you a self-sufficient trader. So you can actually carry this skill for the rest of your life, right? And once you learn the skill of trading, good Lord, it might be a difficult thing to learn, but it is the most rewarding thing ever. Like I said, I went to a bachelor party this weekend and snapped on a nice long, right? So I basically got paid to go, on a bachelor party. So, but there you go. That's a little breakdown of what we do in the Discord. It is not a signals group. I will never say, hey guys, buy here, sell here. It's always, something like this. But obviously, they do play out very nicely. The last long that we had over the weekend was, whoops, from this golden pocket, right? And this one did wind up playing all the way to the value area high. This is actually a separate setup, but we did have that long setup, but the same thing, right? It's like, hey, if we get down here, I'm looking for these confirmations, and then I will update people, right? Like, hey guys, we're getting the bull divs, we're getting the confirmations, let's see if we can get that move up. So there you go. So I wouldn't call it signals, definitely not signals. I will never, advertise my Discord as a signals group. I don't believe in them. I don't think they work. I don't think it's sustainable over time. And I think it's like legal problems of telling people exactly where to buy and sell. I think. But anyway, let's see. Let me come on down here. Yo, shout out to BTC. Bill says 5-point rate hike. Make it fun, Powell. Oh, God. Let's see. Somebody call Satoshi. Shout out to Base Bailey. It's like I got, shout out to Al Jr. says, it's like I go heat up my lunch and my YouTube is glistening and well, oh well. Mr. Candles himself came early. LFG. Shout out to Al Jr. We're here live during the day, baby. Let's go. Usually live here if you're new at 5:45 p.m. Eastern Standard Time. But when we get exciting stuff like FOMC or a big move in the market, I always drop these urgent live streams or market updates. So make sure you subscribe and you turn on notifications so you don't miss this saucy TA. So yeah, I don't want to really go over the altcoins too much, guys, to be quite honest with you, because again, if Bitcoin dumps, the altcoins are probably going to follow. But as we look at Bitcoin dominance here, as we know, right, we've come down to the value area low. We've gotten this nice drop on dominance, which gave us the kick up on the altcoins. But as Bitcoin dominance kind of bing bongs around on this value area low, it's not impossible to get some kind of support here, which could, correct altcoins a little bit. And I always compare this to the previous price action. Last time we were inside of this volume profile, pull up the daily, you can see you get that drop from the POC to the value area low, but you do bing bong back and forth. So this could add some turbulence to the altcoins, but long term, as long as we get those rate cuts, hopefully in September, if they push those rate cuts too much, guys, it could step on alt season. I'm not going to lie. But if we do get them, it would be like pretty much right on time with the 4-year cycle. So yeah, entering that final stage of the bull market, seeing Bitcoin rip up to its final all-time high, and then having those altcoins finally explode. Hopefully that's the case. This will be the most lackluster bull run for altcoins if that is not the case and there's no alt season. That's not the camp that I fall in. But again, with that being said, it's not impossible. So I just want to have everybody aware, like if we do see Bitcoin dominance pop back up, and it doesn't necessarily mean the altcoins are going to zero, right? Because we've seen that happen in the past, right? Like this, you come down, you come down, you bing bong, you bing bong, you bing bong. This is, turbulence for the altcoins. But overall, what was happening here? We had that daily money flow crossing into the red, making, just like I was covering before on the Bitcoin price chart, this would indicate that the breakdown of this range was more likely. Even if you get lower highs, these pumps are just looked at as lackluster pumps, lower highs, and then lower lows. Once you lose the value area low, that's where you get the saucy, the boom, the snap to the downside. So there you go. We'll see what happens. But that's what I'm going to be that's what I'm going to be expecting here until something changes, right? We've been kind of nailing Bitcoin dominance. I'm not going to lie. We were, not a lot of people looking at that 66.21% level. A lot of people calling for alt season in February. We did not say that, right? We did not see that, I should say, right? It wasn't just like a gamble or a guess. It was like, hey, we're reclaiming value area low. POC is probably next. If we flip the POC, we could hit that 786, which we just barely front ran. So yeah, we'll see what happens. Hopefully we see that play out, guys. Low key, we might be the Bitcoin dominance channel of YouTube, crypto YouTube. Let's see. Yeah, shout out to the king of Bitcoin. Says most people will never become profitable, not because they can't trade, but because they can't transform. Yeah, I mean, trading is a game against yourself, which is a very difficult opponent, right? You have a lot of discipline, a lot of perseverance, and you have to enter your trading journey by deleting the idea of getting rich overnight. I entered my trading journey with this exact mindset. I want to get rich overnight. I want to make $15,000 in a day in my second week trading. This is not how it works, right? You have to learn. And you're going to end up paying your market tuition. But the nice thing is, I find it very funny, right? A lot of people give up on trading if they don't get rich overnight. But it's funny, right? People go to college for 4 years and spend tens, if not hundreds of thousands of dollars to get a degree without getting rich quick, right? And then they get into the workforce. Even when they get into the workforce, you start as an intern, you start at an entry-level position, and then you have to work your whole life to get up to that senior level where you're making that good money. I would argue, on trading, you can at least demo trade or practice in bar replay mode so you can kind of avoid some of that expense. But I do think, in order to build a skill where you're making more than a brain surgeon without an 8-year degree, you have to be willing to put some kind of a sacrifice in. Anything worthwhile is not easy, which is what is nice about trading, right? If it was easy, it would be a get-rich-quick scheme, which is too good to be true, but it's not, right? If you actually put the work in, you could actually make this happen. All right, let's see. Bada boom, bada bing. Have to be able to adapt fast in this industry. Yes, absolutely, Chris. Like I could have, if I have my bias, right? My bias was for a push to the downside, right? You guys always know. Anytime, if I'm bearish, right? I could have my biases to the downside, right? But I am always going to cover the possibility of a move to the upside because the market can do whatever it wants. The market does not care about your bias, right? Sometimes the market doesn't even care about the charts. More often than not, it does. But like just because my bias is to the downside here, I'm not just going to say every rip to the upside. If it starts looking good, I'm not just going to keep shorting because that's what I thought was going to happen, right? I'm going to adapt, and then maybe if it starts, looking good, I will look for another long entry on a retracement and get in with the trend, right? Not just try to fight so I'm right. It's one of the hardest things. People say, how do I get that psychology aspect of trading figured out? And in my opinion, you have to let go of being right because in trading, you're going to be wrong. It doesn't matter how long you've been trading, how good you are at it. At some point, you're going to be wrong, and you have to accept that and cut your losses when your trading idea is invalidated and not feel bad about being wrong. It's just a part of the game sometimes. It's like a very, very necessary part of the game. You're going to get stopped out sometimes. Hey, maybe I'll get stopped out live on stream here, and you guys can see it happen to me. And I'm not going to be tripping over it. I get stopped out, I start losing my mind. But anyway, let's see. They claim that September there will be a cut. What if it's a nothing burger again? Shout out to DK Insight. Again, guys, like September would be the expected time. That's kind of where I am like really paying attention to FOMC. I don't know what the projections are going to be. Like if you've ever looked at the FedWatch tool here, guys, this is right. Like every time I look at it, right? Like this is very rarely wrong. So, you know, as we approach, we'll have to see this. And sometimes, right, it could start off like really bad. And then those you know, I think recently, right, it was like a pretty good chance of a rate cut in July, and people were anticipating that. But then over time, it changes. So we'll keep an eye on this as the information develops, right? So, yeah, I mean, if they don't cut rates in September, that's going to be, you know, I'm going to start. Yeah, we'll see. We'll see what happens. I don't know what the situation is going to be over there. You know, we'll have to wait. You know, it's impossible to predict that. But, you know, like I said, you know, my bias here, again, is that, you know, we are probably entering that final phase of the bull market. You know, we have our initial breakout of the range. Maybe we retest and send it to the upside again. But, you know, if that changes, things start to look really, really bad, right? I'm going to adapt to that, right? I'm not just going to, like, take all my losses and be like, no, I have to be right. I have to be right. It's like the same thing here. My bias was a higher low and a higher high, which we obviously did get, which was perfect. But, you know, if we start breaking down to some key levels, I'm not just going to keep holding on and praying for a bounce, right? If the information changes and the charts change, right, I'm going to be, you know, going with the, my bias is always the highest probability of what the charts are saying, but sometimes the charts are wrong. If we broke down more here, I would, and if you guys watch the show, you will know there were key levels down here that if lost, I was going to say, right, like if we lose this level, guys, that's the line in the sand for a much bigger drop to the downside, and that would be very bad. But my bias based off the charts was a higher low and a higher high, and the charts were right, as they are more often than not. All right, let's see. Okay, there we go. Thank you, Tony D, for the live stream link pinned to the top of the chat. So we will check that in. Thank you. We'll check that when it comes up. Shout out to Tony D. Thank you for that. Is that the real Tony D in chat? Guys, don't fanboy over Tony. He gets mobbed when we go out in public. And when we were in Vegas, he was getting mobbed. So, yeah, just... His social battery is dead. I'm just kidding. Shout out to Tony D. Show him some love in the chat, guys. Tony D, if you don't know, he's the other half of this channel, guys. He helps me do everything other than, like, the TA. And even then, sometimes he helps me, you know, execute a trade or something. And he's the man. And there would be no Frankie Candles without Tony D. So show him some love in the chat. Let's see. If no rate cut in September, please send McDonald's application. Shout out to Hamza. Yeah, you guys will see me. I'll get a McDonald's visor, and I will come up here and be like, you know, putting on clown makeup like, guys, crypto's a scam. Altcoins are a scam. But yeah, and I'll keep you guys updated every step of the way. Obviously, we have plenty of time for information to develop, and you know, hey, maybe we change our bias before the rate cuts. We'll see what happens. Shout out to the King of Bitcoin. Said, I wanted to ask if you currently have any work opportunities available. Shout out to the King of Bitcoin. Not specifically right now, but Tony D, maybe we should make an email for like inquiries. If anything, we may be looking for, at some point, video editors. It is very difficult. I cut all my videos right now. Personally, I have a history as in a career of production, so it's easy for me to cut my updates, and they're very urgent, right? So I'll just shoot them, cut them, and upload them right away. But for tutorials and like price prediction videos, there's like longer term videos that aren't as time sensitive. We may be looking for some video editors at some point to take some load off of me. So potentially, yeah, maybe Tony, maybe we'll make a maybe we'll make an email for people, you know, even like some social media help or something like that. Shorts editors, yeah, and graphic designers, yeah, potentially at some point. King of Bitcoin, let us know what you would be able to do. But let's see here. Tony says, Frank gives me too much credit. I'm a bot. Shout out to Tony D. That's not true. You don't give yourself enough credit. Let's see. Yo, shout out to Dan from Mulberry Street. Says, Tony loves putting his elbows on tables. Nightmare to go out to dinner with. They call him Tony Elbows for a reason. Let's go. Shout out to Dan. All right, let's see. Al Jr. said, sir, would you like a value area low on your VWAP burger? I'm just like, you know, serving people at the McDonald's drive-thru. Like, hey, guys, bullish divergence on that McChicken right there. I threw some Mac sauce on it. I'm also curious about the pizza. Shout out to Jesse. Tony makes fire pizza. It's insane. All right. So let's see, what do we got? We got a few more minutes. We got about 10 minutes before our boy Powell starts speaking. Oh, man. I'm not going to lie, guys. Sometimes I feel bad for Powell. It's like, that's somebody's grandpa. And, like, everybody's, like, always mad at him and stuff. He's got a hard job, man. He's getting, like, bullied by Trump. It's crazy. Yeah, I don't want to cover too much of the altcoins, to be honest, right? Like, Ethereum's still in the same situation as yesterday, right? We have our key levels down below. You know, bigger corrections on Ethereum. I would say, like, a worst-case scenario where I would be looking, you know, maybe down to, like, 3,000 to 2,800 to retest these structural highs. I would really prefer to stay above this value area high, but again, this wouldn't necessarily be out of the question, right? If we get accepted back into the value area high, we could come back and retest that structure, but we'll cross that bridge when we get there. But just to get everybody kind of like long-term prepared, you know, if you wake up and Ethereum's, you know, back, you know, we're almost at 4K now. Where we top out at here? Yeah, like almost 4K. If we're like back in the low 3,000s, like, you know, not necessarily like the absolute worst thing in the world. And another thing I do want to show on Bitcoin here, guys, is if we pull our full golden pocket retracement from the low at about 98,182 all the way to the all-time high, you can see that $107,500 to, you know, that $107,000 zone. This is very, very confluent with a lot of our other support down there. And this is, you know, not only a very important level structure-wise, but the if we look at this, right, let me just pull this real quick from 98,182 to the high, right? If I pull up that lower volume profile, right, we do have that in confluence with the POC of the range. So it's not that if we break these highs that I'm instantly bearish. I would love to hold that value area high and these structural highs. But if we did have to deviate back into this volume profile, there is an honorable mention down here at the POC golden pocket. This is still an area where you can put in a higher low and a higher high to continue the overall uptrend. It is getting a little bit suspicious, right? 786 also sitting at about 103.5. I'm going to talk about why I don't love that level as much. But if we did come down there, you have the golden pocket, you have the POC, you also have some daily MPOCs in there. You have a daily MPOC right in that zone. And then again, you also have two daily MPOCs just below the value area high. Now, if we had to make a move all the way down to the 786, you know, technically, can you bounce there? I would not like to see this. And the reason for that, right, if we come down to the golden pocket at 107K, you know, this would still be okay because, in my opinion, right, you're still, you know, kind of retesting your macro value area high. If we lose that 786, or even if we have to come down and test that 786, you are at risk of potentially getting stuck under that value area high. And then once you lose that 786, it does open the door to that $97,000 POC. So, like, this is really, like, please, for the love of God, bounce, right? But preferably, I would like those higher levels. So I've been saying between about like 108 to 107K is like the last line in the sand, and that's the reason why. Because if you bounce off the golden pocket, you're remaining above that value area high. If you go, because typically, right, the 786 is an area where you could put a higher low in, right? But at that point, it's a little bit difficult because you're slamming right into that resistance. But I will also say, you know, when we look at this, every other time that we've dipped below here, it's like, well, hey, oh God, guys, we got the rip down here, right, below the value area high. We also did have a fib retracement level here, but what happens, right? You get the push into the value area high, lower, low. And when that happens, right, the doorway to the POC is still open, but we still kind of snuck out of there. I'm not going to lie, like, this value area high has not been as mean as they could be, right? Typically, it's like you get stuck in here, a very high probability of going to the POC, but we were able to kind of just front run this and squeak out. But I just wanted to break that down because from a context standpoint, that golden pocket is much more saucy at 107.5 to 107. And once you lose that 786, though, it's like, man, you're going to have to deal with potentially getting accepted back into this range. But again, we'll cross that bridge when we get there. All right, let's see. We still got a few minutes. What do you think of XRP dropping to around 232? Let's take a look at XRP real quick. So I will say this. We have a lot of support below that we could bounce off of. We have this anchored VWAP, which is going to be a huge level, pulled from the low of this low here at about $1.90. Once you lose this, you know, I would not be surprised if you get the range retest, which does sit at about 255, just like Bitcoin, right? Like, this would be like a revisit of the scene of the crime. Not the worst thing in the world, in my opinion. At the POC sits at about 240. Is it possible to hit that and then rip to the upside potentially? And then, you know, if I pull up that kind of similar golden pocket 786, right? Golden pocket sits on the value area high, beautiful. There's a lot of confluence on that value area high. You have a daily MPOC. So definitely, like, in my opinion, even if I get these local levels off the chart, this is a very, very confluent level of support. Golden pocket, value area high, daily MPOC, and that does run down to about 249, 250. If you lose that, right, you have your POC at 240, and then the 786 sits at 230. So, very similar, right? I would prefer to bounce off the golden pocket because that's a retest of the range. If you start losing that, I would also prefer to bounce off the POC to get a snap out of that range. However, if you lose that POC, I would actually be looking at 230, right? 786. But again, similar to Bitcoin, a little bit of a difficult situation because you're not even longing the POC, or you're not even like bouncing off the POC. You're bouncing off the 786 under the POC. So you're like, at that point, you're accepted back into your range. If you get stuck under that POC, you might be able to fill down to the value area low. But again, it is a 786, which is a high probability, higher low situation. So it's not that you can't bounce there. It's just a difficult trade to take, in my opinion. So yeah, that's my 2 cents on 230. I will say, you have a daily MPOC and a 786 in perfect confluence at 230. So definitely a level that you could pay attention to. So there you go. And let me bring up those other local levels because I did delete them, and we don't want to lose those forever. So there we go. All right, let's see. Yo, shout out to Lucian says, I dared to listen to you at 1. Shout out to Lucian. Let's go, baby. Just got my fade. Shout out to Servando. Let's get it, bro. Fresh fade. I had a fresh fade like a week ago. Now it's all overgrown. Okay, so let me actually pull up the live stream here really quickly. Bada boom. Let me grab that. Thank you for sending that over, Tony D. Let me pull up my face cam real quick just so I don't leak my social security number. That would not be good. I don't know why my social security number would pop up on the federalreserve.gov website, but better safe than sorry. I love the Mafia. I'm sure nobody would try to steal my identity, but all right, let me just get this ready, and I will mute it for now. And do they play music? Oh, yeah, listen to that music, guys. So calming, so calming. All right, let's see here. Bada boom, and pull up the chart. All right, so we're ready for that. Let me pull this up so I can keep an eye on it, see when they pop up. Let's see. Darius said, have you had somebody pass a prop firm challenge with this strategy? Shout out to Darius. Yes, we actually have. We had a few people in the chat mention that they passed, one person passed multiple accounts with the strategy. But again, it's the execution of the strategy, right? Like you could follow the strategy perfectly, but if you're not using good risk management, right, it might not necessarily be a fail of the strategy, yet a fail of the risk management or the trade management. So, it's not, if you look at the value, I always try to make this very clear, right? Like, for example, right, when we look for these trades for, let me pull up the local price action here. Where is it at? Boom, right? So, we take this trade, right? This trade played out absolutely, literally perfectly, snapping our final TP by, $1 here. Just perfectly smashing that TP. But here's the thing, right? If you could take the entry down here, right? And then if you could ride it into the value area low, right? But if you're not taking profit and moving your stop loss and you just, hold it, if the charts start to look bad at the value area low and you start to reject, right? If you're not locking in profits and using good risk management and the charts are saying there's a high probability of a continuation to the downside, maybe the probability is not going to be as high to fill the range like you would expect, right? The fill of the range is always going to be still tied to the overall context of the market. In this case, it was very nice. It played out in full. But, when it comes to passing prop firms, right, you're going to have to be using risk management. That's the whole part of the challenge. So, the strategy could play out, right? But then even if the charts changed here at the POC and said you were going to reject, you have to be aware and able to identify that and adjust your trade accordingly. But yeah, we have had people pass multiple funded accounts with that, with this strat. So yeah, quick answer, yes. All right, let's see. Is there any sign of diversion in either way as the Fed speaks? Shout out to Bakan. I don't know exactly what you mean by diversion in either way. I don't know if you're just asking bias up or down as they speak. I would say the charts and market cipher B are probably calling for a move to the downside. But with that being said, I am holding a scalp long and also some longs from lower, multiple longs from lower. So there we go. Oh, shout out to Golden Child. Said I'm one of the prop traders in the kitchen. Let's go. Shout out to Golden Child. Let's get it, baby. Let's get it. Calm before the storm. BJK. I hope you mean the storm to the upside. But yeah, could be. All right, we still got 2 minutes, baby. 2 minutes. Come on. All right, what should we take a look at while we wait for 2 minutes? Let's check in on the stock market real quick. SPY. Yeah, this thing's just cooking, man. I'm not going to lie. Like, this is obviously nice and bullish. But, you know, when we get moves up, guys, corrections are potentially in the cards, right? So it's like nice to see the all-time highs. It's nice to see that push to the upside. When we look here, even at like the 4-day, his VWAP has been above the zero line for about 108 days ever since we bounced here, basically in April, right? We got that massive rip to the upside. This is a huge move on the stock market, 32%. So, but it's going to be similar to like crypto, right? If we do get the big move down, you do have the structural highs here at about 612, value area high sitting at 608. Not that I would want to see this, right? But, corrections are potentially not unexpected here. Take a look at the weekly real quick. I mean, it kind of all looks the same. Oh, here we go. Sorry, guys. Sorry. Powell. The music kills me, bro. This is wild. All right. Shh, everybody. He's coming. I'm going to try not to talk this whole time, guys. I will just commentate very, let's be honest, I'll probably talk through this whole thing. Sick quality. This is beautiful, guys. This is like 480p. Top notch. Purple tie as usual.
Good afternoon.
Can you guys hear that?
And I
Let me know.
remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Powell.
Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
Red dot, 15-minute money flow
Thank you.
crossover
I look forward to your
into
questions.
the red.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for.
I will
rate
say,
cut
guys,
now
the
in
chart
September.
is still pointing down.
Is that expectation unrealistic at this point?
Got the 4-hour.
So,
4 hour,
as you know,
15-minute bear
today
setup
we
here.
decided to leave our policy rate where it's been, where I would characterize as modestly restrictive.
This indicates continuation
Inflation is
of the
running a
trend
bit
to the
above
downside.
2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy
Shout out to
were holding
Nirvana.
it
I
back
agree, bro.
inappropriately.
I feel bad
So
for him.
it
If someone's
seems
grandpa, be nice,
to-
guys.
To me and to
Oh, there's
almost
the
the whole
push down.
committee, that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to
This guy's
lower
texting.
rates at that point?
So you're right, we do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Steve.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
Cow's World in the chat. What is going
So,
on, bro? Good to see you.
essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So, at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea of what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still. So you're right. It's been a very dynamic time for these trade negotiations, and
Someone should just ask him if we're getting alt season.
lots and lots of events
Come
in the
on, get real
intermediate
with these
period. But
questions.
we're still, a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are
Dynamic entry, that's
many
how I feel.
uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil.
Are we going to get
Chairman.
alt season?
Neil Irwin with
Powell?
Axios. This morning we got a GDP report in which
Guy stepped
final
on my
domestic
question.
private
What's wrong with
purchases
this guy?
decelerated, slowest pace
That was
since
rude.
22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for
the anchor
future,
VWAP right now.
for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many, many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're
just in the
all
back of the
very,
room.
by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing
My
in
bias
job
is still
creation, but
downside
also
here,
in
guys.
a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable, which is why I said we do see downside risk in the
understand
labor
this is on the
market.
charts,
I mean,
right?
our
Regardless
two
of what he
mandate
says.
variables,
15-minute
right, are
money flow coming
inflation
out.
and maximum
4-hour
employment,
red dot
stable
printing.
prices and maximum employment.
Bearish, market
not so
cipher
much
D116
growth.
strategy.
So
On top of
the
everything we
labor
looked at at the
market
beginning of the
looks
stream.
solid.
we'll see. Come on, just give us
Inflation
the
is
surprise
above
rate.
target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main
I'm gonna try
number
to
you
call
have to look
Satoshi
at
guys.
now is the
Hang on one sec.
unemployment rate, because it's true that
I'll be right back.
demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course, will be watching that carefully.
Colby.
Jeez.
So on the dissents, what you want from everybody, and also from a dissenter, is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table, where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who, I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think, all around the table. In terms of, you ask about the June SEP, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September monitoring might be. We don't have one. So I'll just say that, we haven't made any decisions about September monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates
Low-key.
once the conditions for
That's
a cut
not the
are
look
met,
of paying attention. That's a
barring
different
a
look.
significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be, at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to, slightly looser policy.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean I wouldn't insist upon that. But I don't think I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, though, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it
50-minute money flow, don't lie, baby.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, Do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say when you think that, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, what do you, well, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria.
Eddie, 28 to 27, key support
Hi,
on each.
Victoria Guido with Politico. When
Retesting
it
the
comes
structural
to
highs.
the renovations
With
of the
confidence.
Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work.
Do not want to lose 117.
We're
We gotta
very
start
well
bouncing
along
here.
on that
Again,
work.
bias is down.
And I
Bias
was quite
is
pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Andrew.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important of a $20+ trillion economy, and the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait-and-see approach is giving...
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so that's where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying there's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving some companies will certainly be taking advantage of the fact of the tariffs and all of the discussion of how they're going to, companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often just they'll cross the street in a group, if you know what I mean.
Golden pocket.
That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, they may be less than people estimate, or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
I told you so.
So
I'm not saying I told you so, but dude, my bias is down.
Right?
I highly recommend everybody rewatch the stream before this happened, because this was all on the charts.
We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer-term rates, like Treasury rates. It might be 30-year rates. It might be shorter than that, but it's not the overnight Fed's rate. It's not that we don't have any effect. We do have an effect, but we're not the main effect. There are other things, though, going on in the housing sector, and one of those is just there's kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, and that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. I mean, we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Chris.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target, and the labor market was pretty good. So that was a time when policy was restrictive when we paused, and to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting. Will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down closer to 2?
We'll look at everything. It's, as I mentioned, a pretty reasonable base case is that this will be a one-time price increase. And in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right so we don't, again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Claire.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that might be complicating your attempts to get inflation back to target. Thank you.
So this goes back to the division of labor between
Bailey,
the
crystal
Fed
ball
and the Treasury,
says
as you I'm sure know, and the Treasury only speaks to the dollar. It's not something that's been a topic of major discussion at all at the Fed. I won't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the U.S. economy? Thank you.
We're monitoring the situation. We do, of course, I mean, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But we really need, the government data really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And we're not going to be able to substitute for that, but if we what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress.
We lose the golden pocket,
and,
we go where?
I think it's
7,
very important.
8,
I'll just say that.
6. Maria Eloisa.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper-income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing. But so generally, and if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true, and it was, again, right in line with what we expected, the GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting, some of that can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to, and there's no question that it's slowed, and we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this sense, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you've said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, it may be even lower, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So it's in balance, oddly enough. You've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that, because of immigration policy, really, the flow into our labor forces is just a great deal slower. And those two things have slowed more or less in tandem. If you look at things like I mentioned, quits, look at wages. Wages are gradually cooling. Look at vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market.
Either resistance
or
we get
see
in
that there
and
are
fill it very
downside
quickly.
risks. It's not, you don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the two dissents. Was there talk during the meeting? I know you're not going to talk about exactly what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So, we have an economic go-around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go-around all the way around the table. Everyone gives their views. So the discussion around policy was, the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that they, for the reasons that they're going to express, I won't tell you the reasons, they'll issue some kind of a thing in the next day or so. So, but that's the story, and I would say, well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where, unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock. And it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because inflation is above target. When we have risks to both goals, one of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal. So that means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, more a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is. So that's the framework I think I'd be taking, and we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Jeff Cox.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand.
Got stopped out at a small loss, stopped out in profit on
combine that with some of the housing numbers,
small loss,
the weakness that you
stopped out
acknowledged at the top of your remarks, that the housing market is in fact weak. And the inflation numbers
I'm going to cut him in a
GDP
second,
today,
guys, and we'll get back to the
down
chart.
2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised, after the fact. The labor market data we still think is, continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages,
Baby genius.
Still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation, because you're being pulled in 2 directions, and you have to decide which of those.
Might have called that perfectly, guys.
To go in, and actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not going to say that. No, I just think we're going to need to see the data. And it can go in many different directions. The inflation data and the
single prints filled.
Employment
single
data,
prints filled.
and we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned.
Thank you.
Beautiful example of single prints right there. Tap it, resistance, break in, fast fill. Absolutely picture perfect right there.
Greg Robb from MarketWatch. The Treasury Secretary has said recently that, it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you.
Right from the 786.
Thanks very much, everyone.
riddance, Powell. Good riddance. All right, guys. Well, if this stream has not taught you that TA is the absolute best thing to look at when trading these markets, guys, screw the news, screw everything else. The charts are the truth. If you guys watched since the beginning of the stream, we were talking about the bearish signs we saw on the chart before we knew anything he was saying. That was calling for a move to the downside. We had the money flow coming out, especially on the 4-hour time frame. Come on. There's that crossover into the red, right? When we look at these larger ranges, we say, well, hey, if you have a big green wave like this, and this is just a recap of what we talked about in the beginning of the stream, I highly recommend, if you want to actually learn TA and how to make money trading, this is what to do, right? Watch this stream over. We had the money flow coming out as we bing bong around in this range, right? This indicates that the trend is more likely to continue to the downside, right? That was our bias in the beginning of the stream. Powell didn't shock us, right? We wanted that rip to the upside. We were going to need that shocker rip to the upside. Hopefully we can get it. Somebody said Trump speaking in 45 minutes. Imagine he just Trump's pissed and he's like, you're done. He can't do that though. But, 4-hour money flow crossing into the red. This would indicate that this range is more likely to break down. Now we are getting a little bit of a bounce here. Perfect example of those single prints getting filled, right? I see those single prints on the chart. They are typically resistant and you can reject them, but once you break into them, you typically do fill them very fast. So beautiful little example there. We bounced off the 786. Bitcoin trades so technically. I absolutely love this. But looking at that 4-hour money flow, this could be the indeed B. We are getting the bounce from the 786. Is it impossible to bounce back into the range from here? Not impossible. However, as I talked about in the beginning of the stream, at this point, we have money flow coming out, especially on a 4-hour time frame. This indicates that the trend will very likely continue to the downside, right? At least in the context of the 4-hour time frame. I'll just pick up a random example here. Money flow crosses into the red. You get the big drop down, you get a little pop to the upside, but what do you get? A lower high and a lower low. This is a very similar thing that is happening right now, and when you get that money flow crossing into the red as you are breaking down out of a range, it does indicate that it might be time to leave that range, which is why we are open and we've been looking at this for the past couple of weeks, right? Looking for that bigger retracement where we have the $114,000 CME gap near the larger 786 Fibonacci retracement, and then if we lose that, we are looking down to about 112 to 110K. This does not necessarily mean that it is the bear market. I see a bunch of people saying bear market sell. Is it impossible? No. Obviously, I always say that. Market can shock you. But again, when in doubt, zoom out, guys. We've been anticipating a potential breakdown towards 112 to 110K, and this is why I like to talk about this early. So when we see these scary drops, the Mafia is absolutely prepared. And you're a little less scared of what's happening, right? We are anticipating a potential bigger correction down towards 112 to 110K, right? So we're only seeing the start of that, but this does not necessarily mean the bear market is here. I can't tell everybody that it's a guarantee, but this is the camp that I fall in, and it looks like we are right on time for this bigger retracement. And not only were we looking at this in the beginning of the stream, but we were looking at the daily money flow coming out as we were bing-bonging around up here, a little suspicious of that bigger breakout. And a lot of times Bitcoin will like to get that first big breakout, retest structure before breaking to the upside, very similar to what we had happen up here. Daily money flow crosses into the red, you break down out of the range, you retest, you go back up for a new high. So we'll see what happens, guys. But this was a very, very good stream to kind of show, right? I never just like to say that we're right for the sake of bragging. That's not why I ever say this. But hopefully watching through the stream as we did the TA before he came up, indicating the move to the downside, and then during the live stream, right, letting you know, 4-hour, not only do you have the money flow coming out longer term, indicating a potential breakdown of this range, but you have the red dot printing with our 15-minute money flow crossover into the red, which happened right before the bigger drop to the downside, something we look at all the time. And you guys saw it happen live, commentated by me here on the charts while that news was going on. A little bit weird how we were anticipating the drop before anything ever happened in the meeting. This is the magic of TA. The charts are the truth. And, again, is it impossible to get that rip to the upside? No, but we need that. We needed some kind of surprise dovish tone from Powell to get that to happen because the charts are pointing down. Absolutely insane. Last night, shout out to The Godfather, said, cautiously pessimistic, right? Aware that we could get a shocker rip to the upside, but generally pretty bearish when it comes to the chart. And that did wind up playing. We said that the past couple of days, and did wind up playing out here. So, nothing, just, when in doubt, zoom out, guys. Nothing, this is a little bit scary for today. But overall, right, we're kind of just right on track for that bigger retracement to come in as we've been expecting. All right, let's see. How low can XRP go? Shout out to Monster Fresh or Fresh. we took a look and hang on, shout out to the ETH. I kind of just like quietly commentated here and annotated the Ethereum chart, right, as it bing bongs around above this upper volume profile and drew that line like, well, hey guys, bear signs, get stuck back into this value area high. We might be on our way to that POC. Lose the POC, we could be on the way to that value area low at $3,539. And again, that may not even be the bottom of the pullback. Hopefully it is. Hopefully we can bounce off the POC. Hey, but just looking at the volume profiles, they are very, very rarely wrong here, guys. They are the most goated trading tools that you could possibly use, and you can use it too. We teach it for free here every single weekday at 5:45 p.m. Eastern Standard Time and during FOMC at 1:42 p.m. Eastern Standard Time. All right, let's see. What is the POC? The point of control is simply just actually check out the beginner series. If you guys are new here, you want to learn how I was able to call these moves by just like looking at the chart before the news. Check out the beginner series. I have an entire list of videos that will get you from not understanding the charts at all, starting on a blank price chart. I show you how to mark them up. I have tutorials on how to use the volume profiles to make calls just like this. Watch through that stuff. You'll understand what a volume profile is. You'll know what the value area high, the POC, and the value area low are, and what they mean for price action. But essentially, these are very, very high probability ranges. When you deviate above them, this is where you look for shorts for an anticipation of acceptance back into the range. Once you get accepted into this volume profile, there is the highest probability is to go down to the POC. This is the highest volume node, aka the strongest magnet within the profile. And then if you can't hold that and you lose it, you are going to anticipate the fulfill of the range. And we make calls like this every day on this channel, and I teach you exactly how to do it yourself. I don't gatekeep. I teach you exactly how I do this stuff so you can do it on whatever altcoin you're trading or asset you're trading. This works on stocks. This works on everything. Gold, whatever you're trading, Forex, it'll work on everything. And you guys saw it kind of play out live here, not only before the meeting started, but like during the meeting, as you guys kind of got to see how I analyze the market like live when the price action is playing out. So super nice. We saw those single prints fill. And seems like we're right on time here, guys. So before I let you go, I do just want to cover some local levels here so you guys are all prepared. We're bouncing off the 786. Again, losing that 117K level is bearish in my opinion. And because of the money flow indicating the continuation to the downside, I am going to be looking, if we do get a bounce here, potential lower highs and lower lows. If you can't get back above that value area low, or for argument's sake, if I pull my fib from the high to the low, even if you squeak back in here, you have to be careful of these Fibonacci retracements. If I pull it to the lower high here, let's see. Yeah, I mean, you have golden pocket confluence on your value area low. So if we do bounce based off money flow, we could be aware of lower highs and lower lows, just like we were aware of it. Whoops. I'll just rough it out here, right? Right here, very high probability, lower high for a lower low. What happens? You crack structure to the value area low. Absolutely perfect. Caught that little scalp long, which I personally got stopped out during that live stream at a loss, right? I actually did get take a loss on that, as I mentioned at the beginning of the stream. I didn't take profit at the POC. It was a smaller position. Took a very small loss on that. I also got stopped out of another scalp long that I was in profit, and I am holding another scalp long, or not a scalp long, but a longer swing long from much, much lower, which is still massively in profit. It's up multiple thousands of dollars. At this point with money flow, guys, it indicates the overall trend. So any retracements to the upside, we even talked about it, like not interested in the golden pocket, right? Not even really interested in the 786. If we do get a bounce, I will be aware of lower high and lower low scenarios for a potential continuation down to the bigger key levels of support, which right now does sit between about 114 and 113.1, where we have that CME gap, right? We have single prints down here as well. So just like you guys saw that on during the live price action, right? We did get support on the single prints for the long position back to the upside. And then if we do come back down here, this will be, if we get accepted in here, we might be able to get that fast fill just like we did locally here into the CME gap 786. This is really the next big level of support to the downside, in my opinion. Not impossible to bounce here, but again, lower high, lower low. If we see that play out, all eyes on the $114,000 zone. And then if we get a bounce there, based off, higher time frame money flow at that point, right? If we have the daily money flow crossing over into the red, we could potentially continue to anticipate lower highs and lower lows, right, to potentially target down towards the bigger, more macro level of support at $112,000 to $110,000. But Mafia, this is all right on schedule, right along what we were looking at on the live streams. Absolutely beautiful. Hopefully you guys learned something here on the live stream, watching me do this all live, and hopefully Powell didn't bore you too much. Daily live time, shout out to Tahir. I am live 5:45 p.m. Eastern Standard Time. I'm not sure what that is, UTC. Maybe I should know that. But yeah, just, ask AI. But 5:45 p.m. Eastern Standard Time, I'm here every weekday. And not only do we cover the live price action, I give you the key levels that I'm looking at. I do exactly what I did on this stream, but also I'm very educational, right? I teach you how to actually do this. I'm not going to gatekeep, to keep everybody a slave to my TA. But if you stick around here, ask the Mafia. They'll tell you. You will learn very quickly. And, not financial advice. You have to make your own financial decisions. But our strategies, as you can see, play out very, very well. So shout out to the Candle Mafia. Let's see. Sailor should have bought today. He buys at the highs every time. Shout out to BJK. Let's see. Cryptopher Columbus said, "Sup, Frankie? Can you check for CVD divs?" I was looking at this during the live stream. Actually, I will just show this real quick. We actually did get, if I pull up the 30-minute here, we actually did have some nice CVD divergences as we were, where am I at? Where's my CVD? Let me turn this off, pull up the CVD. Yeah, as we were, where's it at? Right here, right? So you did actually have some nice CVD divergences here, right? This helped us get that last little squeeze to the upside for that long position to push in more into profit above the POC. Look at those single prints. Hey, if we could fill this, might happen quickly. I'm actually going to hang out here real quick. It could also be resistance, though, right? It's not until you break into these that you see them typically fill. But we did have some nice CVD divergences right down here. But right now, it's like nothing that I really see. No CVD divergences for me. Let's see here. Yeah, we'll see what happens here, guys. I don't know if we're going to reject these single prints or fill them in full, but again, my bias remains exactly the same. I will be looking for lower highs and lower lows based off the money flow, not just because I'm bearish for no reason, but just based off the information we're seeing here on the charts. So shout out to the Candle Mafia. I'll see you guys in a little while at 5:45 p.m. Eastern Standard Time. I'll probably do a short stream tonight just because we stuck up here and, I covered a lot of stuff already. But let's see. Frankie is the best of the best of the best. Hey, shout out to Pat Loso. Shout out to you, man. I appreciate you. And we're here all the time, guys. This is not only my job, but my favorite thing to do ever. I feel so blessed to be able to come up here and have fun with you guys on live stream and make money while doing it. And you guys make money while doing it. So, but with all that being said, guys, that's all the time I got for today's live stream. I'll see you guys in a little while at 5:45 p.m. Eastern Standard Time. We'll check in on the aftermath. We'll see if we have anything fun happen in between now and the next live stream. But with all that being said, that's all the time I got for today's FOMC Chaos. I'll see you guys on the next one. Hasta pasta. Frankie Candles out. Bing bong.
Here we go. At the top of the class on a roll, and it's time to run it up, yeah, maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, we winning by a landslide, never see me coming on my landmine, yeah, I ain't taking orders in command, like, yeah, you about to see me on demand, like, on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah, maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, at the top of the class on a roll, ayy, and it's time to run it up, yeah, yeah, maxed out, put the pedal to the floor, yeah, on the road, here we go, Here we go, at the top of the class on a roll, and it's time to run it up, yeah, maxed out, put the pedal to the floor, ayy.